a major change in the stock market direction. Good morning, everyone. This is Ahmed Saleh, and this is the weekly market recap. So the key messages for this time is that Trump is taking a U-turn. He's having now a softer language on Powell and on China. This drives the market to go up as of Tuesday. We have few signals now hinting to the change of direction in the market. We might have some recovery. We might be going up on the short term. Still, the long-term picture is gloomy. And now to the details. What happened last week? Trump has given two statements that indicates that he is paying attention to the market. On Monday, the market was going down and we were about to break the lows that happened after April 2nd. But he gave two positive statements on Powell. He said he has no intention to fire Powell, and he said as well that he is doing some negotiation with China and there could be a deal that will be reached soon. There are also some rumors that there are deals that's going to be signed soon with India and South Korea. And we have also some key resistance points that were broken last week. There are also some indicators that are giving bullish signal. So we'll investigate this and we will see where are we today and what is the expectation for the coming period. Stay tuned. So this is a chart of the S&P 500. Last time we mentioned that we have resistance at 5,500 and we said this is an important resistance. We need to break this. So this resistance was broken on Friday, but why I'm skeptical about the break of this resistance is that the volume is going down. As you can see here, the stock is going up, but the volume is going down. This is normally what we call a negative diversion, and it says that this break is not really a true break. So we might see in the coming week some correction that is going down again. And we might continue upward if we got some positive news from the market. So everything is possible. But we have to be careful that this is not a confirmed break of the 5,500 that we always talked about in the previous video. So what do we do now? We can go in, but not with 100% of our portfolio. You can sense the market and go in with like 10%, 20%, 30%. Just be careful and always have your stop loss ready in case the market turns down again. The same thing is happening in the Nasdaq. It's a little bit better picture because we have 2 days of breaking the downward trend line, and we also broke here the horizontal resistance at 17,250. But we also have the same thing that the volume is not confirming this break. We have to see the volume going up in order to say that this resistance was broken. Okay, but overall, good news that we are above the downward trend line. We are above the horizontal line. We also need to see a higher top and a higher bottom. So we have here one bottom, and this bottom is above this bottom. We have to see a third one here, and we have to see a higher top. So we have this top higher than this one. We have to see a top that is higher than this top here. At that point, only at that point, we can say that we are out of the wood and the market is okay and things are becoming good. But without seeing higher top, then it's still going into the downward direction. Okay, so we have some steps that we have achieved to go out of the bottom, but we are still not yet there. Let's see some more indicators that are telling us that we are going into the right direction. We have here an indicator that it's the first time that we see the signal on this indicator since November 23. What is this signal and what is this indicator? This is what we call the number of companies that are above the simple moving average 50 and the number of companies that are above simple moving average 200. This by the way, from the FinViz, financialvisualization.com, finviz.com. So what is this indicator is telling us? When we see that the number of companies above the simple moving average 50 is higher than the number of companies above the simple moving average 200, which is here is the case, like today is 2,900 and here is 2,655. The number of companies here are higher than the number of companies here. It means that the short-term trend is strong, and this will take with it the long-term trend, and they both will go upward. Okay. So the last time that we have seen something that like this happening was in November 23, before the start of the bull market of 2024, and now it's happening again. Throughout the year, we have seen that the number of companies above the simple moving average was like higher sometimes or lower sometimes, but this is the first time that we see a flip that is happening from the 20s and 30s. So on 23rd of April, the number of companies was 29, and it increased even in the 24th of April to more than 3,000. This is a very good sign. A second indicator that is giving us a very bullish signal, that is called the Zweig Breadth Trust ZBT indicator. So the calculation of this is that we have an indicator giving us the ratio between the advancing stocks over the total number of advancing and declining stocks. And the signal is as follows. When the ratio falls below 40%, it means it's oversold, and then it rises again to be overbought to above 61.5 in a period of 10 days, then this is what we call the signal of this indicator. This signal, whenever it happens, you can see the history since 1950. Whenever it happens, we have a bull market afterwards, and the reliability of this signal is very high. So you can see here that after 1 year of this signal, we get 100% confirmation that it was high in all the cases. It was also 6 months later, it was 100% higher. And you can see here the percentage. It's very high probability that we are going to go into a bull market after that. The last time this happened was coinciding with the previous indicators, so it happened in November 2023. And the one before was in March 23, which was before the bull market of the 2023. So it's a good indicator. We have to take it into consideration because it doesn't give a signal that often, but when it gives a signal, it is normally a good signal. The return is also mentioned here, 23.7 for 1 year, 16% of 6 months. So this is really a good one. This is good for the investors. So the investors who would like to start going into the market and start doubling down in their investment using the dollar cost averaging method, this is normally a good indicator that can tell you that you can start now going into the market, and in 3 months, 6 months, 1 year later, you will have a good return on your investment. So we have some good indicators, but again, watch out, guys. We don't know what's going on with Trump. He has an opinion every day. He can change his mind in 1 day. So he's an unexpected guy. So take care, because we always say the news kill the chart. All these indicators that we have might be killed in a second if Trump comes with tighter tariff, if he doesn't reach a deal. So we don't know what this guy can come up with, so always be careful about this. Always have your stop loss ready. Last week was a very good week, led by the Nasdaq, 7%. And now April for the S&P and Nasdaq is like recovered most of the losses that happened. We're still not there in the S&P equal weight and the Russells. It means that this recovery was mainly led by the mega cap. And that's mainly because of the result of Tesla and Google. We'll talk about this in the next slide. Year to date, we are still in a correction mood, and from the top, we are still in the correction. Russell is still in the bear market. So now, what I think about the market is that we have short term, we are in a bullish direction. We are going upward. These scams are winning, okay? But do we expect to see a new all-time high? I doubt. Do we expect to go back to the high of February or high of December? I doubt. Why? Because the situation now, is it equal to the situation before the tariff? Of course not. Okay, so it's normal to have a correction or a bear market rally. I don't think that this correction upward will turn out to be like an all-time high. But we have to wait and see. Everything is possible, but I think the probability is low. I think we're just going up because of the good news that's happening. But overall, medium, long term, we're still going to see some. We have to plan for this. We have to plan that we are going to see some downward movement again. Let's hope for the best. but plan for the worst. Let's move forward. One of the reasons why the market reacted positively last week was Tesla results and Google results. So for Tesla, the results were one of the worst results that you can ever think about, and it was lower than the market expectation by a big margin, in both in revenue and in the adjusted earning and everything else. But the market reacted positively. It's up about 20% since the result day. Why is that? Because it was already discounted in the price. The price of Tesla went down by almost 50%, so these results were already discounted in the price. Alphabet gave a good result. They have beaten the revenue and the earning per share, and the stock went up by about 4 or 5%. Okay, that was one of the reasons why the market went up last week. If you want to know more about how result does not affect the stock performance, I will post a video about NVIDIA at the end of the video. You can watch it and see why the results has no relation to the stock performance. Next week we have very busy week in terms of results. We have 4 out of the Mag 7 companies announcing results next week. We have Microsoft on Wednesday after the close, and Meta, Facebook, and we have also Amazon on Thursday and Apple on Thursday after the market closure. So it will be a very important week into deciding the market direction. We have also some important companies, Domino's Pizza, and we have Coca-Cola, Pfizer, Spotify, PayPal, Visa, Starbucks, Caterpillar, Lilly, McDonald's, MasterCard, Reddit, ExxonMobil, Chevron. We have lots of companies. These companies will decide to a great extent, are we now washed out? Are the stocks now washed out? And they are including the bad news of the tariff? Or we are going to still to see more downward pressure on these stocks because of the bad results and the bad guidance they are giving? What we have seen so far, that in most of the cases, it was already discounted in the price. The bad news was already discounted in the price, except for example, United Health Group. It was hammered a lot by 22% in one day. But the rest of the companies, it was discounted in the price, like what we have seen in Tesla. Okay. So next week we have 2 important readings. We have the GDP, and we need to have it at 0.4%. If it's lower than this, it will be very bad. And we have also the core PCE. We also have the unemployment on Friday. My trading strategy for this week is to focus on the stocks that were hammered and they are rebounding from support. If they are going up, then I'm long on them. Last time we have talked about the stock of the week, which was Grail. This stock was going against the market direction, was going upward while the market is going down. But there was one thing that I didn't like, which is the volume. And we said that we can go in the stock once we see the volume. Now let's see what happened to this stock. Amazing performance, 38% in 1 week. We have seen that it was able to break higher with higher volume, and then it made 38% in 1 week. Okay, so that's the kind of return. If you plan right and you read the chart right, that's the kind of return that you can get in 1 week. That was all. I wish you a very profitable trade. Take care, guys. And if you like the video, please press like, share it with your friends, subscribe to the channel, and if you have any question, put it in the comment. And always a reminder, this video is for educational purpose only and should not be considered as a financial advice. Any investment you make is at your own risk. Have a lovely and very interesting week, everyone.